Hello, everyone. Happy Sunday. This is Simon with AvaTrade. Welcome to our weekly webinar, Mapping Out Your Week Ahead. And of course, as usual, special welcoming goes to new people. And for you, as usual, I'm using the same quote that traders love when they say you plan your trade and then you trade your plan. We all know that not just in trading, but in any aspect of our lives, it's important to have a structure, and therefore it's very good to have a plan, to have ideas organized, and then we can execute it. Of course, there's no 100% guarantee for anything, but it definitely makes our lives much, much easier and more organized and less chaotic. Few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. I've been trading since June of 2000. I started as a licensed prop trader in New York City, and I did it for about 11 years. And then I moved on, as I like to say, in a less stressful environment. I continue to trade and also mentor and educate others. And I'm very happy I have this great opportunity to be assisting our customers at AvaTrade. Few things about the agenda. What we're trying to do is usual. We go through indices, stocks, commodities, forex. We'll start with fundamentals. That includes a few snapshots of articles. We'll take a look at economic calendar and a few other things that gives us a little bit of an idea from the fundamental perspective. And then we move to charts. And then we'll go through all the assets in groups, as we said here, indices, stocks, commodities, and FX. We'll take a look at the charts and a little bit crypto for dessert, as usual. And this is it pretty much. Risk disclosure, you can find the full statement at avatrade.com website. Of course, everything we do here is purely educational. We do not suggest any trades, and we don't give any trading signals. Social media, please feel free to follow us, subscribe. You have Telegram, you have X, and as I usually say, YouTube channel is my favorite. You have a huge spectrum of information there. You have educational materials, you have tutorials, you have webinars. You can always go back and rewatch it, or if you're missing the webinar, you can always find it on YouTube, record it, and you can find your own time to watch it. Of course, if you are watching this on YouTube, please feel free to click on the likes, share with people that might benefit from it, and if you have any comments, feel free to write them down. So the biggest, I think, there were two main events in the past week. We had the NFP numbers that were stronger than expected, and then we had the inflation numbers that give kind of excitement to the traders, and we still finished the week lower. So this is the article, either Barron's or MarketWatch.com. U.S. economy suddenly seen on track to fable soft landing, 2% inflation without recession. Who needs interest rate cuts when the labor market is looking healthy and inflation is cooling? And here are the key points. The U.S. economy added 130 jobs in January, with the unemployment rate dropping to 4.3%, indicating a stabilized labor market. All four major measures of consumer price inflation have slowed since last summer, with economists noting inflation has remained calm. Despite positive data, some economists remain cautious, with one forecasting inflation could reach 4% this year. So, of course, there's always different opinions. Amazon, we'll take a look when we get to the charts at our Magnificent Seven. Amazon is clearly the loser. And here's the article from Barron's. Amazon's stock just clinched its worst losing streak in nearly 20 years. It's giving investors AWS deja vu. As shares of Amazon deepen into bear market, investors are once again weighing on the company's spending plans with, weighing if the company's spending plans will pay off. And it's all about AI, as we said last week, and it's been a worry for the investors, the overspending, right? In the second quarter of 2006, Amazon's operating income plunged 55% year over year as the company prioritized Prime and its nascent cloud business. Okay, so it went down, but then of course it went higher. So I guess it's a process, right? When you introduce something and there's always overspending. I remember the same story was with Meta when they started their virtual reality stuff. It went down and then we had some recovery. So the key points. Amazon stock fell 18.2% over 9 consecutive days, making its longest losing streak since July 2006. Investors are concerned about Amazon's planned $200 billion in capital expenditure for AI, fearing cash depletion and debt. CEO Andy Jassy urged patience, comparing current AI investment to early AWS spending, which now generates $142 billion annually, right? Also, if you remember, Intel said the same thing. They've been investing a lot, and it takes time for those results to pop up. Like everything else, right? You open a new business. I'm not trying to defend Amazon here, just trying to be logical. You open a new business, it takes time to break even. So if you introduce new direction in business, it's kind of a similar situation. Here we go. The stock market is reflecting fears of an AI apocalypse for white-collar jobs. Investors are shooting first and asking questions later as the momentum trade gets swept up by concern that AI could disrupt established industries like insurance and wealth management. Yeah, last week was all about these things. Artificial intelligence, these are the key points. AI fears are driving a widespread U.S. equity market sell-off. The iShares expanded tech software sector ETFs is down over 23% this year, but the pain has moved, far beyond the software industry. Investor sentiment, rather than fundamental changes, is largely driving the shoot first, ask questions later AI sell-off. All right, so clearly there is a sell-off. Now, apparently there's further issues with funding, right? It says right here, the U.S. Department of Homeland Security entered a partial shutdown Saturday after the Senate failed Thursday to push through a measure to continue funding the agency. Key points. Funding elapsed Saturday after the Senate failed to pass DHS funding bill with 52 to 47 vote. 95% of TSA staff and 82,000 Border Patrol ICE employees are essential, continue work without pay, but airport delays are expected. The U.S. Coast Guard will suspend most missions with 56,000 personnel going without pay if the shutdown persists. Right? I mean, the first thing comes to mind that we might see some flight disruption, and that will be affecting the airline industry. Let's see how that will play out in the upcoming week or days. Now, here's the situation with Feds. As you could see, the probability of the rate cut decreased since last numbers. We have 1 month ago, there was 18.5% probability of the rate cut coming up. Then it went to, a week ago was the same number. 1 day ago was 9.2, so it was cut in a half. So it's only 9.2% probability of the rate cut, as we had good employment data and we have inflation numbers lower. But this week we're going to have FOMC minutes from a last meeting, so maybe we'll get some more clarity. By the way, very, very important to mention, Monday, I hope you all know that, so you could manage your positions going to the weekend. There is a holiday, President's Day on Monday, so US markets are going to be closed. Please check the trading schedule on the website. You can go to the trading info and then choose holiday hours, and then you can see detailed report there with hours and everything else. I think some futures are going to be trading short. I'm not sure what's the schedule exactly, but check for yourself. In any event, the equity market will not open on Monday. The stocks are not, US stocks are not trading. So here we have economic calendar. Before we go into it, for new people that are not familiar to this, it's public info. It's very important for traders because some of the events are crucial and create moves in the market and create volatility. So what I do here, I take out the high impact events only. There's so much more, so you can look through it and choose whatever's relevant for you. As I said, I take the high impact events only. The times here is GMT. So let's just go through these things, and that's what's for the upcoming week. Sunday, we have President Lagarde's speech. We have GDP numbers from Japan. Monday, no numbers, and the US markets are closed, as I said. Tuesday, we have meetings, minutes from Bank of Australia. We have CPI numbers from Germany. We have employment data from UK. We have CPI numbers from Canada. Going into Wednesday, we have rate decision from New Zealand. Definitely New Zealand dollar is to be watched. CPI numbers from UK. And here's the FOMC minutes from the last Fed's meeting. We'll get more details and understand the thought process. That's on Wednesday. Thursday, employment data from Australia, and I guess this is the head from Bank of New Zealand speaking on Thursday as well. Friday, it's a big day for the US notes news, but let's get to that. The retail sales from UK, PMI numbers from Germany, PMI numbers from European Union, PMI numbers from UK, and another speech of President of ECB, Christine Lagarde. And moving into core personal consumption expenditure. These are the important numbers that the Feds are watching. So Friday, 1:30 GMT. That's kind of, I think, between FOMC minutes on Wednesday and the core personal consumption. Those are the two main things for the week. And we have PMI numbers also from US. So these are the things to watch and prepare for this week. As far as economic calendar, some people actually waiting for this volatility. Other traders just watch it and wait till things come down. Everybody has their own style and strategy. Now, these are the winners and losers as usual for the week. On the winning side, we have wheat up 3.59, coffee up 3.11, cotton 1.73, and soybeans continue the strength up 1.59 for the week. To the downside, cocoa continues sliding. All these things we'll take a look one by one at the charts, of course. Sugar down 2.5%, palladium 217, gasoline down 216, Bitcoin was down for the week 2%, and the US indices, S&P is down 147, Nasdaq 143, and Dow Jones 127. All these are futures, right? These are the commodity futures, and here's the mix of commodity futures and indices futures. All right, moving to the charts, and we'll start with indices, then we'll move to stocks, then commodities, and then forex. And as usual, 2 seconds dessert for cryptocurrencies. So we'll start with China. China has continued the weakness. It looks like we're making or continue making lower lows, lower highs here. We the whole week, Monday was a pop-up, and then the rest of the week we were selling. Friday was a sell-off across the board, all the indices, and then high volume here. So if we continue, we might be testing 200 moving average here on the Chinese index. Japan is remaining strong. It's interesting enough, yen, we're going to take a look at yen when we get to Forex. Yen has been gaining strength, but it's not causing any significant sell-off in Nikkei. So Nikkei is remaining very, very strong. Now moving to US indices, as we said, they were all on the list with losers for the week. So here's S&P 500. We started the week with a gap, continuation of Friday recovery, and then the rest of the week we've been really sliding. Thursday we closed below 100-day moving average here. Friday continuation to the downside. So what we can do, just for visuals, we'll connect our lows here, and let's see if this trend line holds. We might be actually testing that trend line. As we said, as the article says, there's a lot of panic about overspending on AI and a lot of uncertainty in that area. So that's S&Ps. NASDAQ actually playing already with much. We see the S&Ps are far from touching the 200 moving average, and NASDAQ is already playing with that 200. We touched it previous week, recovered, and then Friday we touched the 200-day moving average again and had a little bit of a bounce off it. So that's on NASDAQ. As logically, the AI mostly affecting the technology at this point. So Nasdaq's being affected in the most negative way out of three. Dow Jones remaining strong, as we know. We made all-time high this past week, actually. On the 10th, we hit 50,607. The very next day, we failed to go higher. We sold on Wednesday and Thursday. Friday, we came down to 50-day moving average, and we bounced and finished actually in green. So Dow Jones looks strong here, closing 49,720. So these are the US indices. Going to German index right here, we had a big pop on Thursday, closing flat, and Friday we had a little bit of the red day. We are still holding above 50-day moving average here, so technically it is strong. UK is remaining strong. We spoke about it this last week. We said we might be coming down if the market sells. It really holding nicely. Wednesday we had the all-time high again. Thursday we bypassed that level and closed lower, raising about half of the previous day. And Friday we had the green day. So far the UK FTSE is holding very, very strongly here. So that's about indices. Moving to stocks, let's start with Amazon, as it is a big loser here. Take a look. This is your weekly chart. The week of January 25th was flat, and then we had a huge dive in February. Sorry, this is still, yeah, the first week of February was a big dive to the downside, and we are continuing. And so far, we've been able to hold this level here. And the reason I set up that level, this is the week of May 18th, the low was 197.74. This was an attempt to close the gap, but we didn't go lower. Instead, we actually made, from this point, with some zigzagging, we made the all-time high here. And we just came to this level, 6 months later or 7 months later, right? 5/18 February. Yeah. Here we are retesting at level 197.74. So far, this is the daily chart right here. We come to this level Friday, we retest it again and closed higher. So this could be a support, and if not, we could be diving lower, possibly testing the 200-day moving average or this low right here, which could be about the same time, the same level here. The low here, 161.26, and this goes back to April of last year. So Amazon, super weak. Apple has been holding nicely. Friday, where the sell-off, erasing kind of a day and a half of advance. Let's see how Apple plays. We can also draw this line here. This was the strong resistance when we actually sold off 159.91. Let's mark this. $91. So this is our peak on the week of December 22nd. Then we dropped all the way to 200-week moving average, and then we made a high from here. So we could be continuing. Again, we'll see what the market is doing. If we continue lower back to the daily chart, it looks like this level here, approximately around 244, will be our retest. We stopped here, a little consolidation before moving higher. Then we came again, retesting this level in January. This is last month. January 20th, we tried to break that level. We held nicely, confirmed the support on the 23rd of January and moved higher to the previous resistance. Now we kind of passed the middle of this range to the downside. So we could be going lower from here. Microsoft doesn't look strong at all. We had the gap and continuation to the downside, not even close to trying to run to the upside. Microsoft another week in the group. Google slowly was sliding lower. Google was a leader in the group as the AI business was really doing much better than in others. And take a look, we've been holding this trend line, and then we broke to the downside, trading between 50 and a 100-day moving average here. The immediate support could be around here, 299.17. This was the support from which we made a higher high here. Let's mark it here, 299.17. All right, so if we continue sliding, we'll see how we act around this price level here, 299. Meta, we had a gap on earnings. Since then, we've been sliding. We broke 200, 100, and now we broke 50-day moving average here. I mean, we can speculate that we might be holding the trend line here. So connecting the previous lows here. If we continue lower, at some point in the future, we might be retesting this trend line here. Overall, it doesn't look that strong. Tesla, we are trading in this channel in a way between 382 that we had the double bottom here in November, and the top was somewhere here around 470s. Of course, we went higher, almost to 500. 498, this was December 22nd. But if you take this range, this will be between 380s and 470s, about a 90 points range. If we continue lower, we might be retesting this 380s level. Let's see how it works. We spoke about Boeing. We said that we had a nice run. Right now, the run is slowing down a little bit. We're having a little bit of consolidation here. Not sure which way we're going to go. Uber is the other one that we didn't speak about for a very long time. And Uber, for some reason, is selling. I didn't have a chance to find any fundamental reasons for that. But technically speaking, we have 4 consecutive weeks to the downside. On the daily chart, as you could see here, we've been selling. Also, we had this dead cross back January 7th. Since then, we've been accelerating the selling. So let's see in the weekly chart where could be our stop, potential stop, right? If we continue lower, we had, first of all, it's 200-day moving average could be the one as a support. Secondly, we have this level here around 60. That's where the last swing up initiated. So the level here, 60.61. This was the low of this candle. Let's mark it. 60.61. I mean, we all know with Uber, sometimes they come up with some news, some technology advance or anything else, and we have a swing to the upside. As of now, it looks like really we're rounding to the downside. And it could be that we'll complete this leg down to this level, 60.61 approximately. Let's see how that works out. Now, banks, if you remember me saying every time, we have to watch banks because banks often initiate a sell-off in the market. Here we go, a big sell-off after double top here. This is JP Morgan. Right, we had the big sell-off candle, or selling candle here, January 13. We came to the support, then we came right back, and the sell-off came right after we tried to break this 325 level. So clearly, we have 299 to 325, about $26 channel here, right? Approximately. Goldman. The same story, maybe not so intense, but we do have a selling pressure here. Bank of America, similar story. We came as a JP Morgan. We came to the support level, and if we break it and start establishing some resistance price action here, we might be actually continuing to the downside. As you could see clearly, we are making a lower high from here. All we need is the lower low and maybe another confirmation. Citigroup, same situation. We actually broke through the previous low here. It came right back. So we're still holding this level. 110 is a key level for Citigroup. Definitely, we'll be watching the banks and see how the price share being affected with all the issues and uncertainty. And of course, just want to show you really quick the NVIDIA. As a leader in a hardware business connected to AI. Of course, huge move, just, remind us what happened here. But the huge move starting April, we hit the peak the week of October 26. The high was 212. 212 is the area code of phone area code in Manhattan, New York City. This is the high, 212. Since then, we've been selling, trying to move higher, establishing a resistance here around 190s. And as of now, we couldn't break that level. We just had a last attempt The high here was 193.56 this week that we just finished. And as you could see here, we had days with gap ending up lower than Thursday. We just had a big sell-off, a big volume, and then Friday continuation again. So on the daily chart in NVIDIA, we're just below 150-day moving average here. If we choose to go lower, we have support around 170. As you could see here, a lot of attempts to break it. We had a lot of actions here back in the summer of last year. We had two attempts. One was November 25th. Another one was December 16th. And then we tried, but we didn't reach that level. The low was 171 with dollar track. So around $170 would be possible support. So you could see to the upside, when you draw these two lines, you can see clearly that we start building up resistance around 193. So we have a channel of about $23 here. We're trading close to the middle of that channel at 182. So that's NVIDIA. A lot of accumulation here in this channel, as you could see here. Failed breakout, came right back into the channel, and then a lot of pressure, couldn't move it higher. But at the same time, we are holding here. So we're right in the middle. We can go either way. We can go retesting the highs and break through. We can go retesting the lows, break through, or find support. So NVIDIA definitely is being watched by a lot of traders and investors and brokers. Definitely will be watching NVIDIA. All right, moving to commodities, and we'll be using the list of our winners and losers. We'll start with wheat. Wheat had a nice move. If you remember, soybeans continue. So I was wondering when the wheat will catch up with it. So wheat up 354, 3.59%. Nice move on Tuesday, Wednesday, and Thursday. Friday, a little profit taking before the weekend. So looking at this chart, we could actually, this is the weekly chart now with a strong week, breaking through the previous 2 weeks, and we are facing the resistance of about 554.5 from November. This is our resistance somewhere here. That's on wheat. Coffee. No wonder after a huge sell-off, coffee is trying to rebuild some strength. We did have a little bit of a pop. Let's see if that will trigger some buyers coming in. We are hugging this 299 level here. Cotton is next. Also, it's been selling a lot, and this past week we had a nice recovery here. And interestingly enough, we're closing right on this level here, on the previous low from November 14th, and the low here was 62.07. Let's mark that. $62.07, and we did close on Friday right on that mark, interestingly, to the penny. So Thursday we broke through it. Friday had spikes both ways. The down spike was stronger here. We closed right on the price of this low here, 62.07. Definitely we'll be watching cotton and see if it has any strength to pop up. I think the Friday's candle should be our indication. If we break the high, we have a chance to continue. To break the low, we might be coming retest the lows here. That's the cotton. Soybeans, continuation to the upside, and take a look. Textbook example here. We had the high here back on December 1st. The high was 1141 even. Let's just mark it up. $11.41. Guess what the high was on Thursday? 11.40.50, 50 cents shy of this high. Very nice recovery here. So we came, and it looks like 200-day moving average was a strong support here. Also, we came to close this gap. We did close, it took a while, and then we moved higher, and our immediate resistance is 11.41. Nice recovery here on soybeans. Now, to the losers, cocoa is continue losing the ground. We had some consolidation. You have the move after the move down, no bounces. We continued lower. Let's see in the weekly chart. If we continue lower, we might be sliding to around 34.40s. This was the level we had. This weekly chart, right? 3 consecutive weeks we held this level back in 2023, and then we had a huge pop to the upside. So we could be possibly getting to this support. As of now, it is not managing to attract any buyers here. Let's see. That's cocoa down 14.3% last week. Sugar continues sliding here. We had the last leg down, trying to move higher, rounded down, and then broke to the previous low. Sugar is continuing selling down 2.53%. Here we go. So for the sugar, if we're looking for some bounces, we'll definitely need to watch this $14 level. And let's see, to the downside, we actually in the air, we could be continuing, and we'll come, if we continue low, we could be coming to historical levels here from 2020 April, right here to 973. So that's on sugar. You know, I was being sarcastic, I think, a few weeks back when I said that maybe people are trying to be healthy and cut on the sugar. Could be. Palladium. Palladium had a down week, down 2.17%. We had this big leg down, and as of now, we are trading the lower third of this candle here. So you could see palladium down. Let's see, you know, what this week brings for metals in general. Gasoline down week, down 2.16%. Had a nice period of time going higher here with few weeks coming off 170s here, 160s, 170s. We had initial move to the upside, and then bounce down here, close the 200-day moving average to the downside, and our support remains here around 182. Let's see how gasoline works out this week. S&P's, Nasdaq, and Dow Jones we spoke about, and then Bitcoin was down 2%. We'll take a look at the end, as we said, for dessert. So that's as far as commodities. Moving to Forex, we start with dollar index. Something's happening here, right? We started the week with a gap and continuation to the downside, and then we had the rest of the week was flat. We had huge spikes up and down, but as you could see here, you take easier to take weekly chart. We, in general, the whole week drop was on Monday, and the rest didn't move, but we still finished the week lower. So on the weekly chart here, we're clearly having the downtrend on the US dollar, right? There we go. So we did have this spike 2 weeks ago. Came right back. So we have a clear channel here back to daily chart here. I think this candle here from the 11th, which is Wednesday, I think this should be our indication to get an idea where we're going next. So what we do here, we probably create the levels here, approximate. So the high of that Wednesday was 97.14, and the low was 96.35. So we clearly, this is our kind of a channel for now. And let's see how dollar would deal with it, right? Because what happened here, we did try to test probably where the buyers and sellers are. And these are the levels around 96.42 on the support and 97.14 on the resistance. And the rest of the week, we were trading pretty much in the middle of it. Now, what is highlighted for the week is yen. Yen's been super, super strong. And we spoke about the yen. We said a lot of things pretty much every week. We talked about it, about intervention. First, they said the US is involved, then they denied it, and so on. But take a look how this week played for yen. A huge move in yen to the upside. Dollar yen sold heavily here. And the rest of the currencies also sold against the yen. So if we go through them, this is pound yen. Similar situation here, sitting on 100-day moving average. And Aussie, as you could see here, the whole week we've been selling. Yen has been gaining strength. Canadian dollar, the whole week to the downside. Swiss, if you remember, I said about Swiss that one day we're going to have a nice correction. And this was the week. We came from 203s to around 198, 199 this week. We touched 197.74, this level here. So across the board, yen's been strong. On euro, yen, we broke below the previous support here, and New Zealand as well. So yen give traders this week a nice bonus, whoever was on top of their game. This is the yen. Now, the rest of the market, as we said, if you take a look at the measures, they had a nice beginning against the dollar, and then a little bit to the flat side. Here you go, the pound also started to the upside correction, and Friday a little bit to the high. Aussie dollar is remaining strong against the dollar, and New Zealand dollar is struggling with this level 0.60. You look at the weekly chart, it's going to be clear. We do try to break through the previous resistance. We do struggle. Aussie dollar, unlike the New Zealand, we actually broke through it a few weeks back, and then we continue. And here on the weekly chart, we're actually in the very interesting territory here. We going back to January 23. That's 3 years ago. We just reached the level of 3 years ago of the high on the Aussie dollar here, and then we reversed from there. So this level here on 0.715 is our resistance on Aussie. Dollar Swiss remains weak here. Clearly, we're making lower lows, lower highs, and dollar CAD is trying to recover, as you could see here, with all the fluctuation in oil, and it's connected a lot to what's happening or what's about to happen in Iran. As you could see here, we just made a higher low from here, which could potentially be a reversal. All we need to do now is the high break the previous high, and we could be technically in reversing into the uptrend. Let's see if that will be the case. So dollar remains weak. Yen is the strongest. Aussie is strong. Euro not so much. Euro probably sold the most. Euro and Swiss franc sold the most against the yen this past week. So we'll continue watching definitely what's happening there. Now that's it with Forex, and I guess we came to our dessert time, and that is Bitcoin and XRP. Here's Bitcoin. 3 consecutive days to the upside. Our lowest point in this swing down was 59,942, around 60,000. We're trading at 70, almost 70 and a half. So with a nice bounce of 10,500 of the lows. And XRP, a nice recovery here. Beautiful recovery on XRP. We had a sell-off, a biggest sell-off here on the 5th of February, recovered the very next day, and then tried to push lower in the 3 consecutive days to the upside with a very intense buying activity here. So we're facing a resistance around 160s here on XRP, and just to compare it with the lows, we were at 111, 112 just 12 days, 9 days ago. This was on the 6th, and we are on the 15th. 9 days ago, we were at the low of 111.65. We're trading 161.60s. 161.60s. That's about 50% recovery. 40-50%. A nice recovery on XRP. That's it, my friends. Please don't forget about the social media. Subscribe, click on those bells, be notified. Don't forget to click the likes if you like it, share, write your comments. Let's just summarize. We're going to have a busy week, even though it's going to be a short week for the US markets. Monday, President's Day, US equity markets are closed. Then we have a lot of events on the economic calendar. You know what? Let's just take a quick look at it again. These are the key ones: the FOMC minutes on Wednesday and the core personal consumption expenditure numbers on Friday. In between, we have other things that are important as well. And we'll be watching the winners and losers, of course, and we'll be definitely following this quote-unquote panic on AI business. See how that works out. Enjoy the weekend, enjoy your Sunday, spend quality time with your loved ones, and prepare yourself for the upcoming week. Prepare your risk plan and everything else. And of course, have a successful and pleasant week. All the best. Take care.